Hello and welcome to Business Incorporated live on Channels Television. Well, it's the first full trading week of 2026. That's almost over, and it's been quite action-packed so far. Here's what's coming up on the show. South Africa's factory sentiment hits a 6-year low as weak demand and job worries drag manufacturers into contraction. Egypt's gold reserves soars 71%, reaching a historic high as 2025 comes to a close. And global defense stocks rally after Trump proposes $1.5 trillion military budget for 2027. And it's great to have you join us. Let's get a quick check on what's playing out with commodities that we track now. We're seeing oil prices. They've climbed in Asian trade as markets, found some relief after 2 days of sliding prices. They're, supported by a larger than expected draw in U.S. crude inventories and ongoing geopolitical tensions. However, gains were trimmed after a Wall Street Journal report suggested the United States may pursue long-term control over Venezuelan oil supplies, dampening bullish momentum. The rebound follows concerns about a potential global supply surplus, while fighting in Ukraine continues to add a risk premium to the energy complex. So it's still green. Followed from this morning there, Brent didn't lose that $60 level, still maintaining for now. Let's get a check on metals now. Seeing gold prices ease in Asia trading, giving back some of this week's sharp gains as a stronger U.S. dollar weighed on demand. Spot gold fell about 0.3%. That's $4,440. So we're still seeing profit taking right there in the metals market, but with bigger losses we saw yesterday with the likes of spot silver and platinum, the biggest downers. But it's a trimmed loss now. Platinum $2,288 per ounce. Platinum down 0.8%. Also copper down 0.4% after touching $6. Ahead of investors are watching Friday's key U.S. jobs report. We're getting that tomorrow, which could give some direction on what the Federal Reserve would do with interest rates right there in the U.S. All right, let's look at other matters now. Some other stories. We see Egypt's gold reserves has jumped 71%, pushing total reserves to historic highs. Egypt's gold reserves hit a historic high at close of 2025, soaring that 71% to $18.17 billion. The Central Bank of Egypt said the surge reflects, both a global rally in gold prices and its own strategy of accumulating additional bullion, strengthening the country's financial position amid global market volatility. That's what's playing out in Egypt. Then we see global defense stocks climbed after U.S. President Donald Trump called for a substantial increase in the U.S. military budget to $1.5 trillion in 2027, up sharply from $901 billion allocated for 2026. The move sparked rallies in key defense contractors in both U.S. and Europe, with investors betting higher future government spending, will bolster profits, even as markets digest concerns over dividends and share buybacks and broader fiscal challenges. So that's what's playing out in the global space there. Then obviously Zambia is set to negotiate a new program with International Monetary Fund after its current arrangement comes to an end this month. Finance Minister Situmbeko Musokwatane announced that the government will seek a fresh deal following IMF's confirmation that Zambia chose not to extend its existing agreement by another year. Then we see South African manufacturers' confidence fell to its lowest level in nearly 6 years in December as weak domestic demand, job growth and concerns, pushed the sector further into contraction. Absa Group's Purchasing Managers Index dropped to 40.5 from 42 points in November, missing economists' expectations of 45 points and signaling ongoing struggles in the country's industrial sector. You know how important that is for South Africa. Then in East Africa, the Central Bank of Kenya, they launched a tender to sell 281 tons of old and damaged coins for smelting. The move, part of the bank's routine currency management, targets metal smelting and coin minting companies, with the coins to be destroyed under CBK supervision. The bulk of the coins is stored in Mombasa with smaller amounts in Nairobi and Kisumu. And the bids for the tender, that closes January 22nd, 2026. All right, now to our first conversation. Ghana's headline inflation continued its steady downward trend in December, slowing for the 12th consecutive month to 5.4%, the lowest rate since 2021. The sustained drop reflects, broad-based easing in both food and non-food prices, offering, growing signs of price stability as the economy transitions from a period of, elevated inflation and macroeconomic adjustment. I will see, we're joined by Isaac Kofi again now as the head of research at Joy News right there in Ghana. Great to have you on the show.
Great to be here.
So what would you say are the main factors, that have driven Ghana's inflation rate down for 12 straight months? And do you see, these trends continuing in 2026?
Well, first of all, there is two pass-through effects. First one coming from the external side, where if you look at imports, duties in Ghana, they've actually gone down significantly after the currency saw that stability. And the other, pass-through effect has to do with the strengthening of the Ghanaian, cedi against, major trading currencies like the dollar, the euro, and the pound. But significantly, it's as a result of the strengthening of the currency, which gained more than 41% against the dollar in the year 2025. And that was actually the first time since 1994 that Ghana, the local currency of Ghana actually had a cumulative appreciation against the US dollar.
So how significant has the decline in food inflation, been in influencing the overall inflation rate? And what does this mean for, household cost of living pressures? When you go to the markets, can you feel the drop?
Well, I'm sure Ghana has actually, come from a very long journey of turbulence, where in 2022 and somewhere 2023, inflation was as high as 54%. But currently, we are talking about a single digit of, 5.4, 5.3%, and even outside the target of the central bank, which is 8% plus or minus 2. And in fact, if you look at this single digit and you try and do some level of analysis to see whether the ordinary Ghanaian is feeling it, if you can use certain indicators to test, that kind of temperature. If you come to the Ghanaian economy currently, I would say that this is being felt, realistically on ground, because if you go to the pumps, for instance, in 12 months, fuel prices have dropped by more than 40%. And if you actually transpose that into transport fares, also going down by more than 20% since last year, that tells you that, well, if you go to, fuel prices are dropping, transport fares are also dropping, and that is actually reflecting, in prices that currently Ghanaians are paying for. But there's still some level of, risks in terms of even still having a single-digit inflation, because mind you, once your inflation is coming down, using that, that level of force, it means that the central bank will then have to follow through with policy rate cuts. And we saw that happen in 2025, where because inflation was tanking, very fast, the central bank had to cut monetary policy and the policy rate cumulatively by 1,000 basis points. I don't know any central bank in Africa that cut rates by that significant magnitude than Ghana did. And so you see some level of risk also attached, even though we are enjoying single digits. But if you ask me if the ordinary Ghanaian is feeling it, the fact that people are buying less, paying less when they go to the pumps, they can save about 40% of what they used to pay for. If importers goes to the port, they are clearing their goods at a relatively lower price. That is actually affecting prices. So if you ask me if this is being felt, I would say that, well, relatively, that single-digit inflation is being felt.
All right. It should be nice, to feel single-digit inflation, here. But, looking, at the economy generally, we're seeing items such as, plantain and charcoal. They've recorded, larger price, increases. so far. What is this telling us, about the underlying price dynamics in Ghana?
Well, I'm not surprised because, there's always a trade-off, right? Ghana is currently Africa's biggest, largest producer of gold. And in fact, it's as a result of the elevated gold prices. That's why you're seeing Ghana's economy being blossomed. Where the exchange rate situation has improved, even inflation is coming down. But the trade-off is that if you go to the middle part of the country and the western part of the country, where a significant component of the country's food basket is lands that are supposed to be used for farming are now being given to miners, and in fact in some cases illegal miners, and that is really, really affecting food production in the country. So whilst Ghana is enjoying from the elevated gold prices, and that is actually causing some level of stability in the economy, the trade-off or the opportunity cost is that you also have lands that are being sacrificed. Lands that could be used for farming are now being sacrificed for mining. And in some cases, you have river bodies that are supposed to serve as source of water for some of these farmlands being polluted by illegal miners. In Ghana, we call them galamseyers. And that is also one thing that Ghana is battling, and possibly the reason why you're seeing food items such as plantain and what have you, that are supposed to be common staples for people. But even though inflation is coming down significantly to 5.4%, you still have these prices being elevated, and significantly it's as a result of illegal mining and fluctuating weather conditions.
Right, sounds like the same story right here in Nigeria. But thank you so much, Isaac, head of research, Joy News. It was great having you. Thank you.
Great to be here.
Helping us break down some of the good macroeconomic news we're getting out of Ghana in most of 2025. All right, to another conversation now. Nigeria's ice cream market is feeling the heat, literally. Usually high temperatures this season, combined with rising costs of key ingredients, have pushed the retail price of 500 ml tube of 10 point, that's, of ice cream, that's about 10.3%, about 500 ml to 3,200 naira. At the same time, shifting consumer preferences, towards healthier, lower sugar and dairy-free options, are challenging manufacturers to innovate and diversify their products. Let's talk to Favor Adekunle now, an analyst with financial derivatives company. Great to have you on the show. We're talking ice cream here. How has this unusually warm weather this season, how has it affected ice cream consumption, pricing trends, according to what you've seen so far? Help us paint that picture.
Okay, good afternoon, Ladi. Thank you for having me. So yes, you are very right that the price of ice cream has increased by 10.3% approximately to 3,200 naira from 2,900 over the past 6 months. And this attributes to a couple of factors. One of them being, which you can agree with me, that ice cream is highly influenced by seasonal weather patterns. And at this period of time that we are in Nigeria, this is January, we expected that the Harmattan season would have already come, where everywhere is cold, but the weather is unusually hot, and a lot of people are looking forward to cool off with this very hot weather. So there is a high demand for ice cream, and this has also resulted in the increase in the price. We also just recently concluded the festive period, right? There are a lot of parties, celebrations, children coming home back from schools, and apart from other treats that they love, ice cream is one of them. And yes, this is festive season. That was the festive season where there was a lot of spending. So parents would want to spend on the kids to make them happy around the Christmas time. So yes, I'll say those factors on the demand side. There's higher demand for ice cream, which have pushed up the price. And for the cost side, ice cream is the preservation of ice cream. We need constant light. We need electricity supply in order for us to preserve ice cream and get it in a good shape to the consumers. So there is inconsistent power supply, and the producers have incurred the cost of fuel, diesel, to enable them to meet up with this factor to preserve ice cream in the right way, so that it is great for consumption by the time it gets to we final consumer. So yes, operational cost, electricity, transportation are also factors that are very crucial in
Right.
the pricing.
Nobody likes, melted ice cream. No, nobody wants that. Considering, most ice cream ingredients are imported, and costs are rising, what policies or, industry initiatives could help reduce, production costs? I've seen the prices of some imported ice cream to 40,000 naira, 50K. So it seems unsustainable.
Yes, thank you very much for that question. The inputs that are used in the production of ice cream, most of them are largely imported. And here in Nigeria, yes, we produce some of those things like sugar and milk, but we do not have the adequate amount that is needed for the consumption that is required. For example, like for instance, milk now, in a year, we consume about 1.7 million metric tons of milk, and we only produce 700,000. That is about almost 40%, which, we still have a deficit of about 60 there. I would say that the government, needs to pay attention to the livestock industry, where there are, livestock involves animals that produce dairy products and all that, milk. So the government should pay attention to the livestock industry, right? They should give incentives to farmers, loans, and all that can make the process of getting those dairy products from the animals easier, and also methods and techniques which can be used to teach these farmers how better to, take care of these animals, so that they are not easily susceptible to diseases. And with that, I believe that the amount of milk that they produce when they are in good shape would be, higher, and would be better, would subsequently meet, the consumption. Another thing is when investors see that there is a the livestock industry is developing,
Right.
they want to invest more. And yes, I believe that eventually those things, when we start locally producing our ingredients that are used in ice cream, would help bring down the prices of ice cream, and subsequently they should be lower.
All right, we'll keep tracking those prices. Thank you so much. Favor Adekunle, analyst with FDC. I'm sure you go get some ice cream after this. Thank you.
Thank you for having me.
All right, let's get a check on what's playing out with major markets that we track now. We see Nigeria stock market open in positive territory today with the all-share index up about 17 basis points. Strong buying interest we're seeing in the agro sector led by Presco, Deep Cap, Alex as aluminum extrusion. So we're seeing the NGX there still maintaining 160,000 level. The Johannesburg Stock Exchange, another pullback right here, I think just like yesterday. Let's get a check on other parts now. We track, we see for EGX30, the rally continues there, 41,975, 1.04% up, and the Nairobi Stock Exchange closing in the green, maintaining 191 points for the NSI, maybe 200 in view. Now let's get a check on the Gulf region. We see it's mostly negative sentiment right there in the UAE, just near flat for Dubai index. Abu Dhabi, 0.15% down, 10,032 points. If we look at Saudi Arabia, it's also negative there, but flat. But Qatar, a more decisive drop, 0.84%, 10,969 points. I'd expect these would rise, because oil jumped today, but I guess that's not trickled in yet. We'll see if that happens at the close. Therefore, U.S. stock futures, they eased today, putting the S&P 500 and Dow Jones Industrial Average on track for further pullbacks after both indexes slipped from record highs in prior session there. So we're seeing big drops there for the stock futures, giving us what to expect, when the market opens right there in the U.S. Let's get a check on Asian markets now. They're closed. Now, that's for the markets in Asia. And we're seeing mixed sentiment, but a big 1.63% drop for the Nikkei. Hang Seng Index, 1.17% down. Let's get a check on Europe now. Let's see if it's the same picture there. We have Lars Holter joining me. Great to have you, Lars. So what's the picture right there in Europe?
Yeah, Ladi, good to be with you. Indeed, we are actually seeing all of Europe in the red today. Some markets were in the red, of course, for the past few days already. But now Frankfurt is also giving up some of its gains. Not too much, however, we're just down fractions with the DAX. And that is, I would say, pretty surprising given the news out. We are getting a pretty bad report from the Machine Builders Association. They're saying they don't really see a huge uptick in orders. So not much activity in the sector that has long been Germany's strongest and maybe economically most important sector. We're also seeing some negative reports out of retail. And given all that, some minor losses in Frankfurt are actually pretty good for the day.
All right, away from the markets now, we know Germany has long been in a debate over its energy supply, and now nuclear is a topic again. What can you tell us about this debate?
Indeed, Ladi. Let me give you some context here. Germany got out of nuclear energy 2 years ago and shut down its last remaining nuclear power plants with some terrible timing. The country was just at the height of an energy crisis after Russia's invasion of Ukraine, because that had led to Germany and others in the EU, of course, sanctioning Russia and banning Russian gas. That was particularly tricky for Germany because we had long relied on Russian gas as a cheap energy source. Now prices were suddenly up and there was no quick alternative. Of course, nuclear was immediately on many people's minds, but like I said, the government had already decided to shut down those last 3 plants and dismantling them. One reason for that, the fact that the country is actually still trying to deal with the leftovers of its nuclear past, searching for final storage for radioactive fuel rods that were used in power plants over the past decades. And now they just made an announcement here in Berlin. And no, not that they found a storage place, but that the search will likely continue on for decades.
So why is the search for final storage, why is it so difficult?
Well, Ladi, because of what exactly they're looking for. To store these highly radioactive fuel rods, they need a facility that is at least 300 meters below the ground, and it has to be in clay earth or in granite or something. They're also looking for a location that is topographically secure and won't see any earthquakes or such disasters. The point is really to find a location that they say should be safe for 1 million years. Now, at the rate we're going, I don't think we will be here in 1 million years, but I guess that's just me. And now within Germany, the researchers have now taken 75% of the land off the table. Only a quarter of the country is even theoretically suitable now. But of course, you also don't want a larger city nearby. There's many more factors to be considered. For now, the fuel rods used in the past are in intermediate storage facilities, by the way, and they're also extremely secure here. But I guess, you know, when you think of it, it's easy now to see how nuclear energy may be comparably cheap and attractive, but also that it has a long tail.
All right, I guess the energy debate continues in Europe now. Thank you so much, Lars, for the details. I'll see you at the TGIF trade.
Yes, definitely. Thank you, Ladi.
All right, let's get a check on what's playing out in the crypto market now. See, it's red on the screen there with major markets, major cryptocurrencies we track. And we see Bitcoin losing 90K, again, 2.19%. Ethereum also holding on to $3,000, just by about 99 there. XRP, that's had a run recently, but we'll see a big pullback there, about 7.68%. Let's get a check on some of the headlines now. Ethereum developers have completed the Fusaka upgrade with the final blob parameters only fork, marking the last step in the network's 2025-2026 scaling roadmap. The upgrade increases data throughput and lowers operational costs for layer 2 rollups, strengthening Ethereum's capacity to handle growing demand across its ecosystem. And we see Binance have launched their first regulated perpetual futures tied to traditional financial assets, beginning with contracts tracking gold and silver settled in USDT. The new TradFi perpetual contracts allow traders to gain 24/7 exposure to conventional assets using the familiar perpetual futures structure with more assets pairs planned, for the future. The products are offered by, Binance's regulated entity, Nest Exchange Limited, under the Abu Dhabi Global Market. Then we see India's tax authorities have renewed warnings over the challenges of monitoring cryptocurrency activity, citing, limited visibility and difficulties in tracking, income from digital assets. Officials from the Income Tax Department, the Central Board of Direct Taxes, and the Financial Intelligence Unit highlighted gaps in, current enforcement systems during a Parliamentary Finance Committee meeting. So that's a picture of most of the markets that we tracked today. Not looking so bad. We'll see if the TGIF trade tomorrow is better. Thanks for watching Business Incorporated. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.